Hi traders, I've got 2 tips that will help you improve your gold trading. You're going to want to stick around as well. At the end of the video, I'm going to go over a key trading strategy. So I'm on a daily gold chart in front of us here. I'm going to show you those tips that you can help to kind of guide you in your gold trading. Now, we have to understand that gold is pegged to the US dollar. So anything that happens in the US dollar is going to really affect the price of gold. So one thing that we can really do is look to use that in our trading. So one thing that I want you to potentially look at is comparing the US dollar index with the price of gold. So if we go to this compare button here and just type in the US dollar index, so you want to type in DXY, you can see US dollar currency index there. If we just click the US dollar currency index, we can see that this line appears on the chart. If I change the gold price to a line chart as well, I might just actually change the color of that so we can see that. I'll change that to white. You can clearly see there is a inverse correlation between the price of gold and the US dollar index. So if we're looking at the gold price, for instance, we can see that it peaked in and around this area here. The US dollar index peaked at this time as well. Dollar started to trade to the upside here. Gold started to push lower. That's one way we can kind of use the US dollar index to help us guide us in what we should be doing on our gold chart. So if we do see that dollar strength coming into the markets, then we can look to short the gold price. If we start to see the dollar weaken, we can look to go long on gold, and that's how you can use that price action there. You can use it on a lower time frame as well. Another chart that you can actually look to use as well is the 10-year yields. Okay, so here I've got the overlay of the US 10-year yield with the price of gold, the white line, the 10-year, the orange line, and again we can see how these work inversely to each other. We actually have quite an interesting situation here where we can see that when the US 10 years start to sort of peak, it can actually lead to that sort of rollover, and gold can follow through with that as well. So we can see here 10-year bond yields are rising, the price of gold falls. We have 10-year bond yields falling here, price of gold rallies. So you can use the US 10-year to also help you in identifying what's happening on gold. Now let's flip over to a gold trading strategy. So here I'm on a 5-minute chart of gold and I'm looking at potential breakout strategies. So basically, if we just go to indicators and highlight the volumes on gold volumes for me, being in the UK, usually pick up around about 1 p.m, which is that sort of open of the US markets, and that kind of is reflective of the fact that it is pegged to the US dollar. Now when the volumes are highest, that can produce some opportunities for us from lower time frame perspectives. So one thing that I like to look at gold is if the opening range, so the sort of time between 1 p.m. and 2 p.m. for me, GMT, if the opening range is quite shallow, I like to look for breakout opportunities on gold. And this is a really good example here that formed recently. I can see that between 1 and 2 p.m, gold trading within a really tight trading range, very shallow, very narrow trading range. What we saw then was price explode out of that and close out of that range, which then obviously led to a move lower here. So that's a nice little breakout there. You see a slight consolidation and then a breakout of that range. We had a similar picture going into this day as well. If I just highlight to you where the 2 p.m. close was, which was this candle in here, we can see that price obviously formed a high here, formed a low here, and what you look for is price to break out of that range. So very shallow consolidation between the 1 p.m. and 2 p.m. Price then breaks out of that area and rallies to the upside. Now it's very important to note that these are very shallow pullbacks. If I go over to and find you sort of a larger move, again you can see a number of days here where you can see there's a sort of consolidation. Now this one one here is fairly large. It's a very expansive range. The market rallied from sort of 2026 up to the 2030 area. So that was like a $4 move there on gold. So that was, I would say, is quite expansive on gold. And you can see we have the high here and the low here. Market doesn't really break out of that. And in the session, it actually happens more later in the session where it starts to move to the downside. So yes, you could argue, well, you know, it still broke out of the range at some point and it did move lower. So you could have caught a nice scalp on that. But when the range is very expansive, it can take a longer period of time for the market to break out of that range. And you don't really want to be sitting at your charts when the volume starts to die off. You want to be trying to trade it when the volumes are fairly high. So that's something to consider on gold. Hopefully you enjoyed this video update. If you did, hit that subscribe button and I'll see you in the next video.